Hiral Chandrana, the global CEO at Mastek, joins us now to talk about that. Mr. Chandrana, good morning and happy Diwali to you and your entire team at Mastek. It has been a challenging quarter, primarily because you have a large exposure to UK and Europe. Just wanted to understand, how is the situation over there? Europe declined about 2% quarter on quarter. What kind of growth are you expecting going forward for the rest of the fiscal in constant currency terms?
Thanks, Sonia, for having me, and wishing all of you a happy Diwali and best wishes for the festive season as well. So let's start with the overall performance. We're actually progressing well with our strategic priorities. Our year-on-year growth on constant currency was 20.4%. As you mentioned, our UK business is our largest business, and while there is geopolitical uncertainty, we've actually signed up some very large framework deals. These are more medium to longer term deals, but are very, very strategic, where we are among a top few suppliers, whether it's the technology services framework or the data and analytics frameworks. So our team out there is doing a fantastic job, very resilient. We obviously have a currency impact, as you know, because of the sterling pound versus USD. But in spite of that, our continued focus on very critical national infrastructure, right? Whether it's borders and immigration, whether it is trade, whether it is defense and security, we're doing a fantastic job. Our US business has definitely been boosted with the recently concluded acquisition as well. So now we have Salesforce as another ecosystem in addition to our Oracle Cloud business, which gives us a much more end-to-end transformation capabilities.
Got it. Hiral, sorry, we'll come to the US because that's a smaller part of the business. Just to stick with UK for a bit longer, could you tell us UK government contributes to what percentage of your work out of the UK? Because that is where most of the flux is, right? I mean, over the last so many weeks now. So we'll probably get a new government, a new head of state. There's a severe crunch on fiscal resources, spending. So I'm assuming that everything will be given a relook. So I just want to understand, what is the exposure to the UK state, the UK government? Go on.
Yeah, so Prashant, I think it's important to understand where we are playing in the UK government. This has been a business that we're there for the last 20 plus years, as you know. And when it comes to certain critical areas, right, whether it's defense, security, borders, trade, immigration, we manage about 5 million passport intake applications a year. We do about 25,000 irregular immigration cases. So I think the key elements, while there is a lot of uncertainty at the macro level, and completely understand the geopolitical issues, but as far as the civil servants, the people who we work with, some of this critical infrastructure, we actually see a lot of stability and continued growth. In fact, from a medium-term perspective, we see that there's a lot more opportunity in the UK public sector, in spite of some of the macro-level headwinds that the country is going through. Having said that, clearly we're keeping a close watch, and we'll continue to tweak and make some changes to the strategy, which also brings to the point where we want to do some diversification, right, from a regional perspective. But our UK public sector business, back to your question, right, that's about 60% overall is our UK business. And within that, roughly about 50% of that, or 55-60% of that is the public sector.
Okay, got that. Hi, Mr. Chandrana. I wanted to ask you on two parameters. One is the attrition. It's come down for the second quarter consecutively, which is good news. Do you see further softening from here? Point number one. Point number two, on your margins. At the first half of this year, it's at around 18% odd. For last year, you did around 21%. So it's seen some bit of cooling off. What should be the steady state margins we should work with?
Sure, Nigel. We've been actually very transparent that we are comfortable with the high teens. Obviously, high teens is the range of 17 to 19%. We don't guide for margins. Having said that, our attrition, like you pointed out, actually has trended down third quarter in a row, which is good news. But again, we are continuously focused on our people, retention, our skill transformation. Talent costs, as you know, has gone up, so that has clearly impacted margins for the industry. But we believe that this is the comfortable range when it comes to operating EBITDA. Attrition, it's a tough one, but I definitely see a lot more stabilization and cooling down, given the macro level uncertainties as well. And we're doing a lot of people-focused initiatives in Mastek.